Hi guys. How's everybody doing? Ladies, sorry. Well, thanks for having me back. Last year, I think I initially made a joke kind of coming out here. I showed an insurance policy. I was like, this is the most boring conversation in the world. And I had a lot of you come up to me afterwards, like, it wasn't a boring conversation. It's one that we actually enjoyed. My heart was so touched. It's like, oh, wow. I didn't realize it was interesting in any way, but I guess for you guys, this directly relates to your business and ultimately protecting your wealth and everything you built. So it is a very important and interesting topic. So now regarding this name, so hidden risk of hosting, what your insurance isn't telling you, quick note on that. I think, it's important to note that it's not so much what your insurance isn't telling you. Insurance is a contract, so contract language applies. It's all in there if you understand how to read it. Now, the problem is most of us don't understand how to read an insurance contract. And furthermore, most of your insurance agents don't really understand what's in your policy. So what I like to do is help folks understand how to ask the right questions, one, and then how to assess their property to truly understand where the risk may be, essentially. So let's get started. How many of you were here last year? Awesome. Look, about half and half. So last year I did Insurance 101. Oh, by the way, my name is Justin Broden. I'm the Director of Marketing for Proper and Wavo, and also Worcester Insurance. So we sell insurance products for short-term rentals across the board. So that's going to be if you own the home, if you want damage protection for the home, or if you're a property manager. But I've spent nearly a decade educating folks on STR insurance, so we'll get into it. So last year I talked about Insurance 101 and really just touched on the front to back on insurance, kind of everything you need to know so you can kind of understand how to dissect your own policy. This year we're going to do a little bit more of an interactive experience, so we'll get into that here shortly. But ultimately, insurance is really confusing. It's particularly confusing in the short-term rental space because you have tons of options, right? You're a home that's kind of a home, but you're also kind of a hotel. You have options like homeowners insurance, landlord insurance, supplemental insurance, AirCover. There's all these different things. And it's important to understand how they all stack up so you can build a risk management product or essentially a risk management stack that protects you. And then what we hope to accomplish today, so we're going to gain a deeper understanding of your property, unique risks, and identify ways that you can walk away and learn more about what you have and a better understanding of it end to end. So everyone flipped to, I think it's page 17 in your booklet. Are you guys already there? You're like ahead of me. All right, cool. So we have this handy dandy worksheet, and I kind of based this whole talk on this. So last year we did Insurance 101. This year we're going to do an exposure assessment of one of your STRs. And if you're just getting into this and you don't have one, just kind of guess your way through it. Maybe do your dream STR. But these are all pretty self-explanatory. Like, this is stuff that's pretty easy for you guys to answer. I will go into the property details here in a second, but ultimately, I just want you to pick one of them and visualize different things like the amenities, the exposures, what your concerns are, and then take best guesses on some things. And as I walk you through them, we'll have some better guesses. But notes, I think, just one quick note on notes. We didn't realize there was going to be a whole another sheet for notes. So that's actually more concerns, so you can highlight them there. But as we go through this, hopefully we can fill this out together. So the first thing I want to look at are just real quick note on property details. So this is actually what your insurance carrier needs to understand your property. And so replacement cost, if you look at the top there, that is, so we're clear, replacement cost for a home is how much it costs to rebuild the home, not the cost that that it would sell on the open market, not the cost that what you think it's worth. It's if you had to get a contractor and you had to get lumber in there, how much would it cost to replace the home? The contents value, that's everything inside the home. So you pick the home up and shake it. You might have heard this analogy. Everything that falls out, that's the contents. And then the loss of income limit. So not all policies have loss of income / loss of revenue, and we'll learn more about that here shortly. But ultimately, this is the limit of insurance that you would like to insure should you be out of business for some time. So the way that loss of income insurance works, and this is typical of commercial policies, imagine you had a coffee shop. You basically take a best guess as to what limit of insurance you want to insure for in case you can't rent your property for some time. So the way we start this thought experiment is with the estimated time to rebuild. So everyone just visualize in your mind the property that you have and think, based on the area, based on contractors, based on lumber, based on all the factors for that property, about how long would it take you to rebuild that home? That's the worst case scenario for your business income limit, right? So if you had a total loss fire of the home and you're gonna lose $100,000 this year in income, that's how much, that's the top you would want to insure for business income. Now, not all of the clients that we see anyways insure for that limit. A lot of them take a lower limit, but it's something that you can control. So you can look at it and say, okay, I don't want to insure for $100,000 because the more you insure for, the more expensive your insurance is. But I think $50,000 would be good enough to to pay my operating expenses if I had a total loss, or if I had a kitchen fire, let's say, and I was out for 6 months. I think $50,000 is a good place to go. So that's how you kind of figure out about what your income limit should be. All right, so I need a volunteer. It's nothing crazy, just one hand. All right, we got one right here. Stand up. And what's your name? Baran. What is it? Baran. Baran. Great to meet you, Baran. And where are you from? Texas. All right, I live in Austin. Close enough. Awesome. So, how many short-term rentals do you have? Oh, we have a microphone. Look at that.
Let's make this easy.
Perfect.
So personally, I have one short-term rental and help with hosting approximately 20.
Wow. Okay. So we'll just pretend that you just got another one.
Okay.
Because as of today, you are the proud owner of a luxury ski in and out resort with a hot tub in Moonline Basin. This is, I guess I have it right here. This is an entire home in Big Sky, Montana, $758 a night. What do you think?
Not bad.
All right. So we're going to do an assessment of this home, and you'll help me with a few figures. You can actually sit down if you'd like.
Okay.
But we're going to go through this, and we're going to talk about just the different things that we see within this home, and at the same time, I want everyone else to kind of use your worksheet and apply as we go, right? So for this one, now it looks like you have an average monthly revenue of $56,000, annual revenue $677,000. You're buying drinks later. 244 days rented, and average length of stay is 7 days, so looking pretty good. Replacement cost $5 million. This is a hefty one. And contents value of $100,000. Now, Bram, what do you think about loss of income? For this home, what should we insure for the income loss? You can just take a guess, too. So this is business income. Remember, everything we do here, this is a commercial activity. I mean, and this is something that's important to kind of note for everyone. If you're making more than $2,000 a year, that's commercial activity. Now, this home right now, it looks like we have $677,000 annual revenue. I would say with a 24-month rebuild, you're probably going to want, I don't know, maybe $250, just to be safe, right? So $250,000 income. Features of the short-term rental, we can kind of breeze through these. So you're not pet-friendly. You do provide alcohol. How many of you provide alcohol with your rental? All right, just a few. And your short-term rental is not on the water, it's on a ski hill. And you do not have security cameras, so that's kind of a good thing. But as far as amenities, we have a hot tub, grill, sleds, and then some of the concerns. So the concerns that were listed here is the guest use of the fireplace, the guest sneaking a dog in, and slip and falls on the icy deck. Any more concerns you'd like to add? Nothing? Oh, sure. Mm-hmm. So we'll call that a concern. Can you approve? She approves a concern. Actually, it's not something you need to worry about. And I mean, The thing is with liability, you can never be too careful because essentially you can be sued for anything. In that case, though, there needs to be insurance on the vehicle. So auto insurance is kind of a separate bit, and anytime you have a car involved, it should be falling on the insurance of the automobile. Now, well, so if it damages the house, if someone runs into the house, then it kind of reverses it. It's like, well, you know, the one that's going to be paying the claim should be the insurance of the driver of the car and the owner of the car. So it gets a little tricky when you have that type of situation. If you were re-renting this master property, I'd have a different thing to say about it. But it's definitely a concern that's lower on the list. Let's put it that way. Cool. So let's just look through a few of these things, and we're going to flip to the next slide where we got a whole big rundown of everything here. Okay. So the one thing I forgot to mention is that on this particular home, they have a homeowners policy. If you look at the bottom there, it's an HO3 homeowners policy and supplemental coverage through Airbnb, AirCover. So that's the coverage that we have in place currently. So now let's look at what we got total here. So the common policy misconceptions. The first thing we see is that the contents value, which we established, is $100,000. Unfortunately, with a homeowner's policy, you have exclusions for what's called property entrustment. And this isn't exactly what the exclusion says, but this is kind of the general realm in which we label this. So property entrustment, what property entrustment means is if I own a home and my brother wants to hang out at the house, right? So then I take my keys and I hand them to my brother and I say, hey, here, yeah, use the place, you're fine. Like, don't mess anything up. He throws a party and destroys the home. And I call my insurance company, I say, look, my brother, I gave him the home and he threw a party and destroyed everything. Do I have coverage? And they go, no. Why? Because you entrusted the property to him. You literally gave him the keys, right? So they just say, well, take it up with your brother. Either you sue your brother, you make your brother pay, whatever it is. We don't care. Wrestle him. But that's the way a traditional homeowner's policy works. Because property entrustment, they're assuming that it's your home. You're not going to be giving the keys to anyone else. So if you have a traditional homeowner's policy and you hand the keys to a short-term rental host, guess what? You just violated that. So there will be no coverage for everything within your home. The contents, I mean, really the home as a whole, but it's something you want to be very, very careful about. The next thing we have is loss of use is not the same as loss of revenue. How many are familiar with loss of use? There'll be lots of hand raising in this one. Got a couple, cool. So when you have a homeowner's policy, every homeowner's policy, or most of them, have what's called loss of use coverage. What this is coverage in place to put you in a hotel if the property burns to the ground or anything else that's a covered loss in the property. So in this case, we have an income limit of how much did we go with? $250,000? No coverage for loss of income. Why? Because there's no loss of income on a homeowner's policy. There's loss of use. So we got to make sure we understand these terms and see them within the policy language. The next thing we see is, and this is just general of every homeowner's policy, is a business activity exclusion. All of these have different definitions, but this is ultimately what makes a homeowner's policy totally inadequate for a short-term rental. It has an exclusion which says you cannot operate a business at this location. They don't want to take on the risk of a business that you may be having there. Right? And most policies define that as $2,000 or more. A lot of them have provisions that say, well, you can babysit children, for example, in exchange for a small fee. But ultimately, business activity exclusion is a no-go on a policy. It says that you can't operate a short-term rental here. So these are types of things that ultimately what it does, it transfers the option to your insurance carriers of whether they want to pay for you or not. And that's not something we want. We want policy rights. We want to know that if we have a loss and it's covered on the policy, that they're going to defend us in court, that they're going to pay for the damage, because that's what it said within my policy. Business activity exclusion isn't something we want there. So then looking at the liability-related incidents, so in this one, we have personal liability. For a homeowner's policy, all homeowners' policies have personal level liability, which is not built for commercial activity. In fact, it doesn't apply for commercial activity at all. So personal liability is built for situations like if I were to be pushing a shopping cart around Walmart and I run over someone's toe. That's my fault. I was negligent. I ran over your toe. You're suing me. That's where my personal liability kicks in. But it doesn't apply when I have a business especially not at a home. So in this case, we have a couple things that are a concern. So we have the guest use of the fireplace. So the guest used the fireplace that burned the house to the ground. Now you got to tell your insurance carrier there's an Airbnb guest there. That's going to be a problem. Guests sneaking a dog in. So whether you allow pets or not, if people sneak dogs in and there's we've seen this claim a few times where dogs bite the neighbor or, there's a number of situations that can happen with a pet. Obviously, they can damage everything within your home, but what you really don't want is liability. But those are types of things that would not be protected because there are exclusions that prohibit the policy from responding that way. Additionally, a lot of those policies have limitations on the types of pets and what can be done in regards to animals, so you want to make sure you don't have limitations there as well. And then the icy deck, slip and falls. Most policies are going to respond to a slip and fall. In this case, again, since business activity is excluded, not as likely. Now moving on, we can touch quickly on AirCover, because in this case, I would call this an over-reliance on AirCover, right? You have a home which is protected by a traditional homeowners policy. It's pretty much putting everything on the AirCover at this point. The problem with AirCover is it's not actual insurance, and it says this directly on AirCover's webpage. It says it on Airbnb's website. And your name is not on the policy. You do not have policy rights. There's nowhere that you signed and said, I am in a contractual agreement with Airbnb regarding AirCover. That doesn't happen. So that gives Airbnb, much like we gave the insurance company in this scenario the option to pay, Airbnb has the option to pay. And we see that all too often. How many of you have had great experiences with AirCover? Awesome. How many of you had questionable experiences with AirCover? I see more. So you got to be careful with AirCover. I mean, it's there. I would call it a good layer of protection. However, you don't want it to be the end-all, and you want to make sure your base policy is solid. All right. That was great. Thank you so much for being my volunteer. We'll move on to the next one here. So who wants to volunteer for number 2? You can see it's real easy. What's your name? Vera? Good to meet you. Where are you from? Philadelphia? Great. And how many short-term rentals do you have? 4? Awesome. Well, we have one more to add to your collection. What would be your dream property? Where's it located? All right, total opposite side of the country here. So, welcome to Stowe, Vermont. So the River Ridge, it's a serene cabin near Stowe and Smugs. So entire cabin, 5 guests, 2 bedrooms, 2 beds, 2 baths, and $384 a night. Looks like a beautiful spot. This is where I want to retire someday. All right, so hopping in here, we'll look at, we got operational details, $2180 for the monthly revenue, annual revenue $33,000, days rented 215, and the average length of stay is 3 days. So the replacement cost on the home, about $400,000. Contents value, how much do you think for the contents in the home? Let's get some photos up here. 15K? 30,000? 20? Do I hear 25? Do I hear 30? All right. Let's go with, what do you think? What's your final answer? 20. All right. Let's go with $20,000 on this one. Okay. So we have, where did I leave off? All right. $20,000 for the contents value and loss of income, $30,000. The time to rebuild, about 12 months. Seems reasonable. As far as the features, not pet friendly. You do provide alcohol. Short-term rental is on the water, and you do have security cameras. So let's talk about a couple of these real quick. Who all saw the news, the Airbnb news today? Was it today or yesterday regarding security cameras? So I think we talk about this later, but it's on my mind now. This is big news. So actually, proper insurance, I think it was 2 years ago, we had to restrict a portion of our policy, which we do not restrict our policy. Our policy is the most robust in the market. But what we found were that we needed to restrict when it came to security cameras. And what we do is we just tell people, look, you have coverage for invasion of privacy lawsuits in regards to cameras, provided they're not in private areas. So they can't be in areas that are have a presumption of privacy. And that is what Airbnb has just announced. They're on the same page. And I would wager that the reason is because they don't cover invasion of privacy. I'm sure they've had several lawsuits. Actually, if you go, I believe it's Airbnb.com, if you just Google Airbnb help article 3145, I believe, that's the list of all the liability exclusions from Airbnb. And you'll see that one of them is personal and advertising injury, which beneath that is invasion of privacy. So looking at this further, we have amenities, a fire pit, a wood stove, and bikes. How many of you provide bikes for your property? Not too many. Bikes are tricky. People are riding around, they got rusty chains, all kinds of things can happen. But some of the current concerns, damage to the beautiful interior. We put a lot of money and time into the design. How many of you agree with that sentiment? Right? Okay. And what happens if the guest is injured on the bikes? On this one, we have a homeowner's policy with a rider. A lot of times these are called home sharing endorsements. How many of you have a home sharing endorsement or know that you have one? Okay. So we'll look at some of the weaknesses of that policy. So homeowners policy HO3 with a rider evaluation. The common policy misconception. So when we're talking about home sharing endorsements, every company that has a home sharing endorsement has different requirements around a home sharing endorsement or different contract language. So you have to look in the policy, you have to understand what the actual limitations are per policy. But these are just some of the standard limitations we see with these policies. So the one limitation that we see with a home sharing endorsement is that often they will require that it be your primary residence. How many of you, your short-term rental is also your primary residence? A few, right? If it is not your primary residence, then you're in big trouble. Because again, contract language. It is not, if it says that it's supposed to be your primary residence and the house burns to the ground and then they find out it's not your primary residence, they have the right to deny any claim. You don't want them to have that. So we want to make sure it doesn't limit you in that way. The other thing we often see is a restriction on the number of days you can rent. So in this case, we have it rented annually for 215 days. But the policy in this case restricts it to 150 days a year. Again, if you have a claim and they audit your business, then they have the right to deny a claim. Don't want that. Now, that's not the end all. 150 days, I've seen them as high as, I think 150 is the highest I've seen. I've seen them as low as 30. So I want to be very careful with that one. This is one of the endorsements that we often see brokers and agents just prescribing. They give it to you like, oh, this works just fine. But it usually comes down to they didn't ask enough questions and you didn't tell them enough about the policy for them to understand, or about your operation, sorry. Limitations on income protection. So $30,000 is the loss of income limit. Unfortunately, these policies usually highly limit income, if at all. They usually cover a level of loss of rents, which we'll talk more about that here in a little bit. But loss of rents and loss of revenue are totally different things. But you need to make sure you understand exactly what would be compensated in the event of a claim. And then in general, they're just generally weak coverage. So insurance is based on, and this is something I want everybody to kind of take home. So insurance is based on a transfer of risk, right? When I insure your property, I'm saying, look, you give me money, I will take all the risk so you don't have to have it. And if you have a claim, you can call me, right? But it comes down to, like, when it comes to cost, it comes down to how much coverage I'm taking on. So the way that I limit my coverage is by exclusions. I just exclude a bunch of different things, and now I can charge you less, but I don't have as much that I need to worry about, and you feel like you got a deal. You need to make sure you understand that deal, right? You need to understand, what am I actually giving up, and what do I need? And that's why we're doing this handy-dandy little worksheet. So generally, though, you know, with the home sharing endorsements, we see them, they're pretty weak. You need to make sure you understand the coverage and make sure that it's not so weak that it doesn't meet your standards. Moving on, we have, let's see, if you look at the amenities, common liability scenario is not covered. Fire pit, it'd be questionable whether that'd be covered on a home sharing endorsement. If we were to have a fire, particularly if it were to catch like the neighbor's house on fire, for example, that would be a liability suit. So if your guests had a fire in the backyard, burns the neighbor's house down, your neighbor would then be suing you. Guest biking. A home sharing endorsement on a homeowner's policy is going to be personal liability. So again, questionable whether they're going to respond if you have a guest on a bike. You're going to want to make sure that you look and see if it has any recreational activity limitations. I haven't seen these in there too much, but just something to be aware of. Waterfront access liability. It's just what I'm seeing here is it's just a higher risk home. You have a lot more that could go wrong, so you want to make sure you have adequate protection for potential lawsuits in that regard. Thank you, by the way. Absolutely. All right, I need one more. Come on. What's your name? Sam? And where are you from, Sam? Charlotte? Awesome. And how many properties do you have? One property? We got two now. You know what's coming. Where's your dream home? Tropical? I don't actually remember what this one is. I think it's kind of American tropical. There we go. Deep in the Midwest. It looks like a ton of fun, though, right? This is a great property. I'd want to stay there. So, rustic cabin vibe, dog-friendly, and water toys. And if anyone sees a home they recognize, please let me know. We just pulled these off Airbnb, so I have no idea. Entire home in Sunrise Beach, Missouri. $950 a night. So Sam, you're doing really well because I've already taken a peep at your annual revenue here. $255,000 and 22,000 for monthly revenue. 313 nights annually, and an average length of stay 4 days. Replacement cost. What do we think it would take to replace this home, Sam? She'd like to buy a vow. 1.2? We'll go with that. Sounds good to me. I don't think it's as big as it looks. Yeah, it's on the lake. All right, let's go with 1.2. Now, is that what we think it would sell for, or what we think it would cost to rebuild it? See, there we go. $800, $900? I don't think any of us actually know. We'll go with, we want to go with 800. That feel good? All right, 800,000. Let's roll with it. All right, so 800,000 for the replacement cost. Contents value. Wait, did I go back too far here? Or am I good? No, we're good. Contents value 30,000. Loss of income 200,000, and then the estimated time to rebuild 24 months. So pet friendly, yes. Provide alcohol, no. Is the STR on the water? Yes. And do you have a security camera? No. The good things. The amenities, kayaks and paddle boards. I also saw like a bike, some kind of a bike water toy. There's a lot of crazy things. There's a trampoline in there as well, which we can talk about that later. Water toys, water slide. Some of the current concerns, fire pit usage. The guest brings bed bugs and providing bikes, kayaks, and boats. Any more concerns, Sam? The trampoline. Yeah, the trampoline is definitely a major concern. So it looks like for a policy, we have a DP3 landlord policy on this property. So let's look at it. I'll just hit the trampoline because it's top of mind. So trampolines, I mean, someone like Proper Insurance, we have you remove trampolines. It comes down to they're just too risky. All there is to it. There have been so many incidents, and I won't dig in on those, but a lot of bad things that happen on trampolines. It's just not worth it. It makes your listing look very attractive, but ultimately it's your call. I would recommend not having a trampoline in this case. There are some water slides that are appropriate, particularly the ones that are the full cylinder, so they're enclosed, so people can't fall out the side. Something that's a little safer where they can have a good time, but not risk hurting themselves very, very badly. Common policy misconceptions. So this is standard of most every landlord policy I've ever seen, and it's something that I would say most everyone misunderstands. The first thing we see is an exclusion for intentional acts of theft and vandalism by guests. So why is this? Why do landlord policies exclude theft by guests? Because landlord policies are built for long-term tenants, right? Landlord policies have existed for a long time, I think 50, 60 years, maybe a little more. But they were built for a long-term situation where I come and stay at your house, I change my address, you give me the keys, I put all my own stuff in there, and then you don't see me for 6 months, 2 years, whatever it is. You also usually require that I have my own insurance. So that protects you, or keeps a layer of protection between me and you should I, have someone over and something go wrong. But ultimately, landlord policies were built in such a way that they're pretty weak in general, but they're kind of just the right amount of coverage for a landlord situation. Now, the problem once you have a short-term rental situation is it's totally different. It's an active business. You have guests coming and going all the time. You put all the stuff in there. There's a lot more going on than a landlord policy would cover. So the first thing we see is that exclusion. So landlord policies do cover theft, but you have to read that very carefully because they cover theft as a result of break-in. So if your neighbor breaks into your short-term rental, you have a landlord policy, they steal everything out of it, it's likely that the policy will respond, provided that they don't hit you with a business activity exclusion or some other reason. But if your guest pulls up a U-Haul and pumps everything out of your home, which we paid that claim, there's no coverage. So you have to be careful with that. So in this case, we had $30,000 worth of contents. Contents is accounted for in this policy. Loss of income versus loss of rent. So the next thing we see is that the loss of income we put at $200,000. Well, a landlord policy is built for long-term rentals, and it carries what's called loss of rents. This pays for actual or fair market value for long-term rentals in your area. So let's say that you were out of business for, let's say you had a kitchen fire, and you're out of business for, I don't know, what is this one, 255 annual, let's just say you're out for 3 months, you lost $60,000. During that time, you call up your insurance company and say, look, we had a kitchen fire, no problem, we're gonna cover the kitchen fire. And you're like, also, during this time, 3 months, I'm gonna lose $60,000. They go, well, unfortunately, you have a landlord policy. And loss of rents would say, we need to go look at other homes in your area. Let's look at this thing again. How much do we think it would cost to long-term rent this home? In Missouri, mind you. What do you think, Sam? $3,000 a month. So you're looking for $60,000 over the course of 3 months. You're getting $9,000. And that's based on the other homes in that area that were rented on a long-term basis because that's what they thought you were doing. That's what you told them you were doing. You told them you were a landlord, but that's not the case. So we want to make sure we have the right policy to make sure that our income is compensated adequately. Now, the other thing we see on a landlord policy is a business activity exclusion, which is kind of tricky. Not all of them have this, but you want to look out for it. So landlords are actually considered passive income. I don't know about you guys, but, well, I do know about you guys. I'm sure pretty much everyone here would agree that STR is an active business, right? And that's the way they look at it as well. So we haven't seen that in precedent be a problem too much, but it's something to be aware of because ultimately, again, the contract language is king. The big one with landlord policies, and I want everyone to really understand this one, is off-premise liability exclusions. So a landlord policy, one, and I didn't really go into limits here. Limits is how much you're insuring for. Coverage is what you're insuring against, essentially. So with limits, a lot of times landlord policies have really low limits. We always recommend at least $1 million of liability coverage. But for off-premise liability, the problem is that it stops at your property line. So if you have a home, in this case you have a lake home, right, Sam? And it has trampolines and water toys and all these other things. Sam, do you own the lake? Unfortunately not. So that's beyond your property line. However, we can see in your listing, you're promoting all of these things. This is part of your advertising. So when someone is injured on the water bike, they're going to hold you liable. However, if they are injured off of the property, off those little blue chairs, beyond that line, with a landlord policy, no coverage. They don't have to cover any liability beyond your property line. So if you have bikes, no coverage. And that's just that's just the premises liability restrictions of, regarding the property. I mean, the actual premises liability coverage is generally pretty weak, and then it doesn't cover things like invasion of privacy, liquor liability, all those types of events. But ultimately, you just want to make sure that if you have off-premise amenities or things that take your renters off the property, that you have a policy that's going to follow them anywhere they go. The other problem we see with this is dogs. So your guest brings a dog, goes for a walk, bites the neighbor. Don't want that to happen. We had one recently where, maybe I won't give that example. we had a dog that got out. The dog bit the neighbor. The neighbor corralled it in the garage. They called the sheriff. The sheriff came. The dog attacked the sheriff, and then they had to put the dog down. So, and this is a short-term rental, and you just don't want that situation, and you don't want to be held liable for that situation, right? So we can tell people, hey, you're not allowed to bring a dog, or at least you're not allowed to bring a big dog, but we can't always stop them from doing it because people sneak dogs into these things all the time. We can make sure we have the right policy to cover us should something go wrong. Beyond that, we have paddle boards. Liquor liability, definitely a concern. So I kind of covered a few of these. Bed bug bites, most all policies. I mean, I can tell you that proper insurance, and I think one other policy covers bed bugs. It's really rare unless you're catering directly to this market. And then injury on a water slide, and the dog bites, which of course we covered. Now, liquor liability. So this is a tough one because for those of you that do include alcohol, you want to make sure that you have a policy that's going to respond if you're sued based on the fact that someone drank the alcohol and became intoxicated and tries to come after you. Now, obviously, that's kind of a far out there scenario. It's happened, but the bigger concern is unintentional furnished alcohol. And we've seen this a bunch. But let's say that I have a party here, and a bottle of vodka rolls under that couch there. If you or your cleaner does not find that bottle, you just furnished it for the next guest. That's unintentionally furnished alcohol. That's your fault. You left it there. So you, in that case, would be negligent. That's a perfect example of negligence. You want to make sure you have a policy that's going to respond if something like that were to happen. But that's really the top to bottom on the DP3 landlord policy. I think the next thing we need to do is just kind of explore what makes a true STR policy. So this is where our company, Proper, comes in. We build a policy from the ground up that covers short-term rentals in the ways that I've kind of described here. So what does that look like? And this is a good one to take a photo of. Property and contents, no business activity exclusion, no property entrusted to others, no property entrustment restrictions, so guest caused damage, coverage for intentional actions of theft or vandalism. So a policy that's treating your home like the business that it is, understanding exactly what you're doing. For liability protections, commercial liability of $1 million, no premises liability protection or limitations. So commercial liability, a true commercial liability product that's going to follow your guests anywhere they go, on the premise, off the premise, wherever they may be, for the life of the contract they signed. They signed an agreement to stay at your property. The amenity liability inclusion, so we have bikes, boats, golf carts, and more, all these amenities that we've seen today. With the exception of that trampoline. We're going to make you take that trampoline out, Sam. Sorry about that. Personal liability added if it's also your primary home. So for those of you that said that you also have it as your primary home, so if we replace your homeowner's policy with a commercial liability product, we actually still need to add in personal liability so that you have personal liability for when you're out in the world. It's a little more complex, but that's something that a company like ours is able to do and accounted for. And then liquor liability, communicable disease. Communicable disease is hot tub. I think we saw a hot tub example. Hot tub, usually you see communicable disease claims, and then invasion of privacy, and that would be something like the security cameras in the wrong place. You would be, let's see, another example of that would be if you just walk in on a guest, like let's say you thought they were leaving tomorrow, they thought they were leaving today, but they're leaving tomorrow. You walk in early, they can sue you for invasion of privacy. Income protection, true loss of revenue protection with owner-specified limits. And what that means is you tell us how much you make. We'll insure you for that. If you have a covered loss and we're reimbursing you for the income, it's going to be, there's no time limit. It's just a matter of what comes first. We get the work done and your home is back together again, or you run out of income limit, right? So no time limit on that reimbursement. Compensation based on past revenue or local STR data. So we get this question a lot, but with for example, with proper insurance as loss of income, we're basing your income on what you expect to make, just like we would a coffee shop, a traditional business. If you don't have data based on, say you don't have previous year data, then we could look at local STRs and account for what you should be making. So for example, with Sam's home, there in Missouri, I'm sure the neighbor is making just as much money, right? And we're going to look at the images and say, okay, that's actually a comparable policy or property, not the the neighbor that just decided to rent yesterday and they put no real thought into their rental. Finding a comparable business. Bells and whistles, bed bugs and fleas, squatters protection, equipment breakdown. If you lose the AC unit and you can't rent, what do? Well, if you have equipment breakdown coverage, it pays for the AC unit, and it also makes sure that you're going to have income compensation while you have to relocate that guest. And then backup of sewers and drains, limit removed. This is actually something that Proper is releasing here soon. We have a lot of claims regarding backup of sewers and drains, and that's when someone stuffs something down the toilet. I'm sure most of you experienced that to some degree. We currently have a limit of $25,000. Based on popular demand, we are removing that limit. So you'll have even higher level protection with the policy like we offer. So that's really the top to bottom on a commercial homeowners policy that fully replaces your current coverage. The next thing we're going to do, we just got a few minutes here. How many of you made it to the end of your worksheet? Has everyone been following along? Let's see, I've seen some writers out there. Awesome. So take action. All right. So what we want to do now is kind of take our assessment. And if you like, we're happy to do a coverage comparison. We will look at your assessment and give you tips, tricks. We can call you and do an education bit. Go top to bottom on your current coverage and do a comparison. So if you like, take a photo of your current assessment. You can, at this QR code, you can submit it. I think we just ask for your name and phone number. Throw it in there, and we'll give you a call. We can do an assessment. But if nothing else, send a photo of this worksheet with the URL to your Airbnb, VRBO listing, however, Book Direct, whatever it is, to your insurance agent, and make sure they understand what you're doing. They can't help you pick the perfect policy for you unless they understand truly what your risks are. So you have an opportunity to really help them understand, and then through that process, gain better knowledge on what coverage you have in place. So, and then if you have questions, you can always call us. I do have about 2 minutes for any questions. If you guys want to step up to the mic here, or you can just holler them out. Either way. Oh, you got beat.
Is there only one? It's just a real question. So
Sure.
You only do small dogs? Is that what you were saying for the dogs?
So Proper Insurance, we have no limits on dogs or animals of any kind. We've seen claims with bears, bats, snakes, all the things. What I was saying was that a lot of insurance companies either flat out exclude it or they will limit it, right? So they'll say, we will defend you, and this is usually personal liability, but they will defend you, but it can only be, or they can't be what they call, how do they usually label it? Aggressive breeds, right? Aggressive breeds. And then they usually have a provision, they say like, oh, Rottweilers, et cetera. That's why we just removed it altogether. You can't control what's coming out of your property. And good luck telling people, hey, no Rottweilers, right? So you just remove the exclusion, protect people if they have actions involving pets or animals of any kind. So.
Hello.
Hi there.
I actually got into a debate with a property owner. I was doing an arbitrage, and I explained to him about the property insurance. He's a contractor. He remodels homes. Mm-hmm. What the debate was that he thought it was very risky for us to do a short-term rental or Airbnb because this is what he explained to me. Even though I explained about the proper insurance, he's like, if somebody falls, and this is his just his warning, and becomes paraplegic, once the money runs out of proper insurance, they're going to come after me and my company. And okay, so explain why. And he said that there was a recall on a plumbing, and it has nothing to do with him. He was using a plumber, and then they went after the company, and after the money ran out from the plumbing insurance, they went after him. He said, it has happened to me. If somebody has a permanent disability, falls in the front of my house, after the money runs out of proper, the lawyers are going to come after me. Mm. So was he right? Or this was in Tulsa, Oklahoma.
Thank you.
Well, because it was an unclosed, no, I'm just kidding. Yes and no. I mean, it's ultimately, we're all trying to protect we're doing the best we can to protect against as much as we can, right? Like that's ultimately it. That's the whole point of this exercise is like, hey, let's assess our risk front to back and come up with the best insurance stack that's going to protect us at the highest level that we can afford and want to pay for. I mean, something like proper insurance, like we're an expensive policy because we cover more than anyone else. So it's not for everyone. And it may be for you later down the road, right? Once you have 10, 20, 30 properties. Regarding this, you know, ultimately I can sue you for anything I want. I can sue you as many times as I want, many times as I want to go to court. Like if you get sued by the wrong guy, I'm sure someone can exhaust a lot of money trying to bring you down. I haven't seen that as much. I'm sure it's happened, but it's, you know, if you have $1 million limit, generally these things settle pretty quickly. You just want to make sure that you have something to fall back on and that someone's going to defend you in court. That's what it comes down to. So, you know, a quick bit on liability insurance. A lot of folks don't understand this. So you have $1 million limit of liability. That's just to pay the settlement. That's all there is, right? Everything else is paid by the insurance company. So if you have insurance and it's covered, right? Let's say you have proper. It's an invasion of privacy lawsuit. We're going to protect you. So we're defending you in court. We're not charging you anything for that. Like that's all the cost for defending you comes out of our pocket. The $1 million just to pay the settlement. Now, could someone just keep hitting you? Of course, right? I don't know if that would fall under a second occurrence. It would totally depend on the situation. There's only so much you can do, and there are those cases that are just, you know, fringe cases. I would say in this case, it's probably a pretty fringe case, unless it was blatant negligence, meaning you, like for example, if you don't have any smoke, guys, please put smoke detectors in your homes. If you don't have any smoke detectors in your home, and someone has a fire and someone dies in your home, that's going to be a problem because you showed extreme negligence and not giving them any way to save themselves, essentially. And in that case, you know, punitive damages may come into play. It's hard to say. So
going back to that, if there is a permanent disability or something happens, that could happen. That scenario that he was explaining to me could happen, correct?
Yeah, if you have if you have something of that, or so I'll use an example. I think it was Gulf Shores a few years back. There was a property manager who was sued. I think it was $11 million for not having depth markers on the pool. Someone dived in the pool and they were heavily injured. And they were intoxicated even. But, you know, in that case, like proper would be defending you. Your limit is $1 million. Beyond that, it's just, you know, we're going to do the best we can. And after that, I mean, there becomes a limit where you're just not prepared for from an insurance perspective. Like I don't really know how else to put it, unfortunately. You know, you could get an umbrella, let's say, but you got to be aware that the umbrellas are follow form. So if the umbrella didn't cover the first incident, it's not going to cover. Or sorry, if the base policy did not cover the incident, say in this case it was a liquor-related incident, then the umbrella is not going to respond at all. So it doesn't really even matter. Or for a lot of you have a personal liability umbrella. It's not going to. It has a business activity exclusion too. So if you're really worried about that, you would have $1 million commercial liability policy and then another $10 million commercial liability umbrella, and that's going to cost a lot of money. So it just really depends on how far you want to take it, ultimately. So I think I have time for one more. Sorry, guys.
Then I'm sorry, I'm going to try to squeeze
No worries.
2 questions into one. So you mentioned the appliance breakdown. Is that like a home warranty? So would that be covered under proper or no?
So it's similar to a home warranty. So generally your insurance carrier tells you, hey, take it up with your home warranty because the appliances aren't covered. Proper has introduced equipment breakdown specific coverage. It's an additional fee, but you can add it and we'll cover the specified equipment within your home.
Awesome. And then you mentioned bikes. Do you also cover like golf carts, jet skis, boats, and motorized vehicles?
Not motorized. Good question. So, and I forget exactly what our limit is. It's always kind of fluctuating. But we do cover paddleboards, kayaks, small watercrafts. I believe it's under 5 horsepower is the limit.
But
Anything
no-
where
no
someone
golf
can get up,
carts.
like jet skis, you need to have a separate policy to protect you there. You should probably be kind of renting it out separately as well. Like a lot of times you're advised to have a different LLC. That's a different business. But that would be the limitation.
And no golf carts?
Golf carts are permitted provided that they're not registered for on-road use. So going back to the very beginning of this talk, I think it was you that had the question about the automobile. If it has a license plate, it's registered for on-road use, you need an automobile policy. That would apply there. If it's not, if it's just like get to the beach or around the farm, whatever it is, proper would protect it. That's a pretty particular provision of our policy. So
Thank you.
you're very welcome. Thanks so much, guys. If you have any more questions, come see us. We're in the marketplace. And yeah, thanks for having me.